Hello everyone, my name is Ashutosh Kar. I'm a chartered accountant, certified public accountant from USA with a PhD in commerce. I've started this YouTube channel to post videos relating to US taxation for both individuals and for businesses. To start with, we'll be posting videos relating to US taxation for businesses. So without any further delay, let's start the video.
Chapter 1, Type of Business Entities. What comes to mind while starting a business? The first thing that comes to the mind is the type of business entity you want to establish to run your business. It determines which income tax forms you have to file and the amount of taxes you have to pay. There are various categories of business entities that you can establish to run your business in US, like sole proprietorships, partnerships, limited liability company, C Corp, S Corp, and non-profit corporations. The ownership, the liability, and the taxes that need to file differs from one another. In case of sole proprietorship, the ownership is with one person, the liability is unlimited, and the taxes they have to file are self-employment tax and personal tax. In case of partnership, the ownership is with two or more people who are called partners. Unlimited liability, the taxes they have to file are self-employment tax except for limited partners and the personal tax. Limited liability company. Ownership is with one or more people. Owners are not personally liable. The taxes they have to file are self-employment tax and personal tax or corporate tax. C Corp, one or more people. Ownership is with liability. Owners are not personally liable and the taxes are corporate tax. S Corp, one or more people but not more than 100 and all must be US citizens. Similar to C Corp, owners are not personally responsible in case of S Corp, and the taxes have to file as personal tax. Non-profit corporations, the ownership is with one or more people. Liability, owners are not personally liable. Taxes are exempted, but corporate profits cannot be distributed. We will be understanding the advantages and disadvantages of each of the business structure in detail so that you can decide when you start a business what kind of business structure or a business entity will be beneficial for you to run the business. To start with, sole proprietorship is a simplest business entity wherein one person or a married couple can run the business as the sole owners. There is no need to register a sole proprietorship with the state. We might need to get some local business license or permits depending on your industry. Advantages is very easy to start, very minimal corporate formalities. Tax filings are very easy in case of sole proprietorships. Can deduct most of the business expenses on your personal return. The disadvantages are key in proprietorship, the owner and the business are not separate, the same. So there is unlimited liability. The owners are personally responsible for business debts and liabilities. Sometimes it becomes difficult in getting business loans and raising money. In case of general partnerships, partnerships are quite similar with sole proprietorship. The key differentiator is in case of sole proprietorship, the ownership is with one person. In general partnership, there can be more than one person. Two or more owners can be in a partnership. The benefits or the advantages of general partnership are quite similar to the sole proprietorship. Easy to start, no corporate formalities, don't need to observe all business laws on own because partners will be there, right? As I said, in general partnership, we can have more than one business, two or more business owners. So automatically your risk get divided. The disadvantages are similar to sole proprietorships, unlimited liability. All the partners are personally responsible. Some state each partner may be personally responsible for another partner's negligent actions or behavior. That is called joint and several liability. Sometimes there might be disputes among the partners, which can be a blockage in the business, though drafting a solid partnership agreement can help you avoid this. Limited partnership. Unlike general partnership, limited partnership is a registered business entity. You must have to file paperwork with the state. There are two kinds of partners in limited partnership. One, the general partners who actually operate and assume the liability for the business, who own, operate, and bear the liability for the business. And the other categories are silent partners or limited partners who only act as investors. Limited partners don't have control over business operations and have very fewer liabilities. They typically act as investors in the business and also pay fewer taxes because they have a more tangential role in the company. What are the advantages of limited partnerships? A good option for raising money because investors can serve as a limited partner without personal liability. There is an advantage for limited partner that can they leave anytime without dissolving the business partnership. However, it does have some disadvantages. It's expensive compared to partnership and general partnership and proprietorships. Limited partner may also have personal liability if the inadvertently take to active role in the business. C Corp is another form of business entity. It's an independent legal entity that exists separately from the company's owner. Unlike sole proprietorship and partnership, here owner and business are different. There are many more regulation tax laws that the company must comply with in case of C Corp. The methods for incorporating the fees and the forms vary from state to state. The pros are, as I said, owner and the business are separate. So the owner doesn't have to pay all the liabilities. The liability is not unlimited. C corps are eligible for more tax deductions than any other type of business. C corp owners pays lower self-employment taxes. Even you have the ability to offer stock options, which can help you raise money in the future. Even C corp has disadvantages, like it's expensive compared to proprietorships and partnerships. The filing fees ranges from $100 to $500 based on which state you are in. Even C Corp faces double taxation where the company pays taxes on the corporate tax return and then shareholder pays taxes on dividends on the personal tax returns. Owners cannot deduct business losses on the personal tax return. There are a lot of formalities which they have to abide in case of C Corps, like holding board meetings, keeping in meeting minutes, and creating bylaws, etc. An S Corp preserves the limited liability that comes with a C Corp, but is a pass-through entity for tax purpose. There is also another form of business structure that you can go with. It's similar to sole proprietorship or partnership. The S Corp's profit and losses pass through to owner's personal tax return. There is no corporate level taxation for an S Corp. It has advantages like similar to C Corp, owners and business are different. Compared to C Corp, S Corp doesn't have this double taxation effect as an S Corp is a pass-through entity. So the government taxes it much like a proprietorship or a partnership. Disadvantages of S Corps are same disadvantage that C Corp has. It's expensive. Even you need to comply with a lot of corporate formalities like C Corp. However, there are more limits on issuing stocks with S Corp than C Corps. Limited liability company is another form, it is another type of business entity that you can establish. It takes the positive features from each of the other business entity types like corporations, LLCs offer limited liability protection, but LLCs also have less paperwork and ongoing requirements that are more like proprietorships and partnerships. So basically, they have taken the good points of both proprietorship, partnerships, and corporates. The advantages that a limited liability company has, owners and business are separate. In case of LLC, unlike C Corp and S Corp, you have a choice to be taxed as a partnership or as a corporation. Not as many corporate formalities compared to C Corp and S Corp. However, it is still expensive compared to sole proprietorships and partnerships, and it requires registrations with the state. So, in a nutshell, if you have to decide upon what kind of business entity you want to float to run your business, to start with the basically three criteria or the 3 points that need to be taken care of or to be analyzed is the limited liability protection, the tax treatment, and the level of government requirements. In case of sole proprietorships, partnerships, liabilities, there is no limited liability. It means unlimited liability, tax at a personal rate, and government requirements are very low. In case of limited partnerships, the liability is limited only for limited partners. General partners taxed at a personal rate, and the government regularities are more or less mediums. S corp, C corp are the liabilities are limited. Here, owner, business owner, and the businesses are separate. S corps are taxed at personal rate. C corps are taxed, must pay corporate taxes, but they have to be concerned about the double taxations on dividends. Level of government requirements are very high. In case of LLCs, similar to S corp and C corp, limited liability protection is there. Can choose how to be taxed, and the level of government requirements are somewhat medium, not as high as C corp and S corps. Next chapter, which we are going to discuss in the next video, is tax withholding and reporting. If you have liked the video, please like, subscribe our channel, share among your friends. See you in the next video. Thank you.
Hope you have liked the video. If you have any suggestions, feel free to share your feedback in the comment box. Looking forward to hear from you all. Thank you.